Per usual, living on this channel is for educational purposes only and is not intended as financial advice. It is Setup Sunday. Let's take a look at some setups across the board, expecting probably a bearish week, a pullback week, maybe even bearish the rest of the year. What little we have left here. I suspect most of the big money institutional players are less likely to get into new positions towards the end of the year, and or they're just gone on vacation, right? So I think the next big moves we're going to see is relative to ETF stuff potentially in the first week of January, should a bunch of those get approved. So all in all, just looking at the heat map on a monthly basis, we're doing pretty good. We've done pretty good. Past 4 months have been green. Past 2 months have been green, just as historically November, December has generally been coupled since 2015. As far as a green December since 2012, we're kind of underperforming green Decembers, but not by much, right? You know, if you average this out, the average is probably in the 20s. And on the year, we're doing fantastic, obviously. So at this point, 50% retrace of the bear market, pre-halving. I don't know how much more, honestly, we could ask for without being like turbo greedy about everything. Makes sense to me that we'd spend the next 2 weeks consolidating, making up our mind, drawing something that's tradable. In the moment, it just feels very choppy. If we look on the quarterly basis, Bitcoin also doing very well. For Q4, we're above the post-2013 average. Again, for Bitcoin, Q2, Q4, I'm sure you've heard me say this plenty of times, but Q2, Q4 are historically where the money-making quarters have been since 2014. That has changed slightly over the past 3 years, mainly because Q4 has been kind of meh. So we'll see how much the seasonality sticks come ETF time, should we get those approvals in January. I think we'll see bullishness on the day, but I think on the quarter, we won't actually see things ramped up probably until a couple months after. It's going to take time to get those products connected, get people to start to sell those products, get people convinced enough to buy those products. So that I think is going to take some time. If we look at ETH historically does best the first half of the year. This Q4 has actually done quite well. On balance, most of its Q4s have been quite terrible. And this would make sense for ETH to actually catch up a little bit because, man, people absolutely love to just hate ETH right now. And I'm right there with them. I agree. I don't know who it's for at the moment. The fees are super expensive, but they have all the tech. The layer 2s are acting as parasites. The alternative layer 1s are just parasites, just copying and pasting or bridging over. So we'll see what shakes out there in the first half of next year. But if there's any time for ETH to shine, it's the first half of next year. And ETH BTC continues to be down bad on Q4s. Historically, it's very rare to have a positive Q4 for ETH BTC. Once again, ETH BTC tends to do best first half of the year. It's just crazy how it just drops off on the second half of the year. So again, we're kind of getting to a point where you could argue it's kind of a bounce or die situation for ETH BTC. I'm in the die camp, but if we bounced, it would make sense with seasonality on the ETH BTC pair. I don't know why it would outperform Bitcoin if Bitcoin has these ETF announcements and products and flows. That takes time again. So maybe there's going to be some ETH ETF hopium pushing this up that somehow outperforms BTC. I just really doubt that to happen, especially seeing all the alternative layer 1s that people thought were left for dead last year actually kicking the pants out of ETH right now. Kind of a weird situation all around, but seasonality does favor the first half of the year for ETH BTC. Looking at some other, looking to Bitcoin charts here. There's been lots of talk about the Fed. What's the Fed going to do? The Fed is continuing to reduce its balance sheet, referred to as quantitative tightening, QT. Previously, it had been in quantitative easing, referred to as QE. And if the Fed actually wants to pivot, the QT process isn't necessarily congruent, let's say, with easing. So it'll be interesting what comes of that come actual pivot time. And for me, the true measure of liquidity here isn't even the Fed's balance sheet. It's reverse repo, which we've talked about for weeks and weeks now. I'll talk more about this on Monday, but it has declined to its lowest level since the top. 683 billion. This probably won't get drained completely to zero because this is used for money market mutual funds, money market accounts to park ultra short-term cash. And they've been moving that ultra short-term cash to longer, but also short-term treasuries. Anyway, so that's why we're seeing the outflows here. And it's also going to be interesting if the pivot and or QT to QE lines up with reverse repo hitting some sort of floor. That's something to watch for in 2024. As far as some other price indicators, we look great. If you zoom way out across the board, we're where you'd expect us to be in a super early bullish period. 2-year moving average multiplier, which is the 730, right? And then 5 times the 730. Moving average basically acts as an oscillator. We're in between that, exiting the sub 2-year moving average. So it looks plenty bullish as far as relative to the 200-week moving average. We're still in the cool zone, in the blue zone. 200-week moving average is moving up slowly. From a relative perspective, we're still kind of close to the 200-week moving average. No super big concerns there. Basically, we're just looking for, are we overbought? Are we oversold? Are we in the middle? Is there anything screaming at us that says it's all over, right? It's unlikely to see that pre-halving anyway, but it's always good to check this stuff every once in a while. Buy cycle top, not even close. Historically, this has found the top, let's say, 3 days relative to the cross. This cross was created based on a backtesting of these 3 all-time highs. It did correctly give you a heads up on one of the more recent all-time highs. Rainbow chart, we look great, still in the blue zone. There's people talking about DCA or not DCA. I'm still in the DCA camp. I think we have plenty of upside. You have to give yourself time and you have to give yourself plenty of room and opportunity, right? Just because we're at 40, I'm not, I'm here for 250 plus. If we hit it, great. If we don't, great. But the entire year has been a great DCA zone. And if we look at realized cap hodl waves, this is a fun one because it looks at the historic coin movements based on the age of recent movements. So if a coin is held for 10 years, it's going to show up here. If a coin is held for 24 hours, it's going to show up here. What you'll notice is we start to see the unhodling process occur as we reach, or as we have reached, extremes in price. And this effectively acts as plaster on the ceiling as we're making the top, right? As more and more supply starts to get sold, people have their number on the way up for whatever reason, every cycle, that becomes the top. Currently, we're not seeing any major spikes in coins of these age groups that have historically marked the top, right? So what we'd be looking for is another spike in these ultra short-term movements. Not seeing that just yet. This to me still looks like a soft accumulation, right? We are seeing a rise in coin movements, so it's not purely cold storage, but we're not seeing the extremes that we'd see at a cycle top. MVRV, another classic market cap versus realized cap. Again, it's just an oscillator. That's all you really need to know. You can always dig deeper on this, but ultimately with plenty of upside, we can sort of look at, okay, where were we pre-having at previous tops, right? We have a little bit of room potentially, maybe to the 2 value on the Z-score. We're currently at 1.42. So you could argue for a little bit more. I don't think we're going to see it this year for the remainder of the year, but I think that would be something to look for come January, for sure. If on the day of ETF approvals in January, does MVRV hit 2? Something to look for. If it does, is that the top? My guess is it will be. We'll see some interesting fun times on that day. Maybe a Darth Maul. We'll talk about that more when we get closer to it. But, Darth Maul will be just a massive wick on both sides. Probably we could go to 50, close the day at 40, sell down to 30, right? Like it just could get absolutely insane. I don't think there's going to be a lot of selling pressure on the lower side, but who knows? Who knows? Whale multiple, I think of it just as how rich are the miners getting. The miners have been getting fat and happy recently because of fees. Fees have absolutely exploded. And again, as an oscillator, typically does a really good job picking out tops and bottoms. When are miners at risk of getting extinct effectively at the bottom. And when our miners extremely fat and happy, that's been the top typically. So we got some room there. As far as fees on Bitcoin go, fees across the board have been rising recently because of on-chain activity, partially due to Ordinals NFT nonsense, which look, if you can do this on any chain, go for it. Who am I to stop you, right? It doesn't mean people won't have an opinion on what you're doing. Not that that matters, but it is what it is, right? If it's allowable by the protocol, then you can either fork or you can lobby for a BIP or change the code, right? Anyway, so you can see the inscriptions exploding recently again, and you can see the fees, especially over the past week, increasing dramatically. Something else you can watch is the mempool. So this is specifically the number of unconfirmed transactions. You can see it was approaching over 350,000 yesterday. If we zoom way out, you can see, the ordinal effect, right? Sometimes the immediacy of an auction causes this. Sometimes the herd mentality of wanting to get something through the chain quickest causes this. So it's kind of been a mixture of everything over the past 6 months. But we can also look at the fees waiting to be confirmed. And that is a massive 120 BTC, right? That is a massive fee waiting to be confirmed collectively. So that's come down. But again, this is why the miners are doing so well. And if we zoom way out, you can see how crazy things got at the top of the block size wars 2018. It's alleged and probably true that some of these miners, Antpool, the pro 2xers were kind of bidding up fees and paying themselves at the end of the day because they would spam the network, confirm the blocks. And you can see how quiet things got after that was all over. So this was clearly someone paying a lot of money to spam the network. What we're seeing now isn't spam the way it was in 2018, but to some people, that's what they think of it as, spam. We can also check average block size. Average block size has continued to tick up post-SegWit, post-Taproot, and with the invention of Ordinals. So we're continuing to see block sizes ratchet up a little bit. If we talk a little bit more about price, as I transition from light mode to dark mode, across the board, this is the potential that you're talking about. And I know a lot of people are trading the legacy stuff, so I included that as well. This isn't a tomorrow thing. It's not maybe even a weekly thing. It could be all the way into January. I don't know. But what I do know is on the daily cloud, for all of these charts, pretty much any coin you can pull up, we still remain extremely overbought. So just as we had a mean reversion on the weekly to the top of the cloud, we're set up for a mean reversion to the downside on every chart, basically, in crypto. AVAX being the biggest downside risk here, followed by Sol, as well as Marathon on the miner side. So I'll point these out, but the reason I bring this up specifically is because look, if you're going to get blown out on leverage, you get liquidated because you're not aware of a potential AVAX move to the downside like that. Just saying, maybe think about some stuff. This is from BitBo, Power Law, long-term Power Law, really created by H.C. Berger. I mean, this is like one of my favorite old school theoretical long-term price channels. And again, we are where you'd expect us to be, right? Plenty of fun times ahead. Here's the Power Law on TradingView. And again, I can only say it so many times and so many charts. We look really good still. We bounced where we needed to. We're basically in this quiet but determined channel here, slowly. And the next step usually occurs post-halving, where we take a different approach and we start climbing, right? And we're not there yet. This is kind of a great way to just set expectations. For the downside considerations, we also have the pitchfork, the year-to-date pitchfork, which has a midpoint around, let's say, 33K. Okay. Over time, this will move up. So if it takes this time to move down, support will meet price eventually. There's also a yearly pivot at 38 to contend with. There's the weekly cloud at 42. 47, 48 is the theoretical max in a pre-halving year that we've seen. So I think there's plenty of reasons to slow down up here, right? Then if we look at the 20-week moving average, that's also all the way down here at 32. So I don't think we collapse to meet these averages. I think it's a little bit of both. And we start to pull back a little bit over time here, then regain some strength into January. This was the one thing that could have broken up today or into tomorrow that really just didn't seem to want to. You know, you could call it a pennant or an equilateral triangle. In any event, if this does break down, the measured move would be the same as the daily Kijun level at around 36.5. Throughout the week, something to watch, I guess, would be kind of an Adam EVW situation at 40K. But that's definitely an if this then that. I think in the moment, down is probably expected, right? I mean, here's the weekly cloud. Again, the trade's over as far as what we do until April. You know, it's probably going to be a massive chop fest aside from January. And then we're going to spend the next 4 to 6 months kind of repairing the chart as we typically do, where we have these news catalysts or events that bring us up or down, and then price sort of settles in and reconsolidates. Here's that Kijun on the daily, and on all these charts, for the most part, they've held above their Tenkins on the daily. And if you just think of this as a moving average pair, a 20 and a 60, very similar in the concept. So the next rung down on the ladder would be the Kijun. And we can go through all the time frames on all these charts. I'm not going to do that. But for Bitcoin specifically, you can see where this support starts to creep up on us at 40. You know, this would be an edge to edge to 36 on the 12 hour. On the 8 hour, we would just lose cloud support completely. So I'm definitely expecting some down this week in Bitcoin and just broadly, right? ETH, same thing. You know, all this analysis is basically exactly the same for all these charts. For ETH, it's 1980. ETH BTC on the daily, which I rarely look at, but on the daily, this thing hasn't been wrong since the beginning of the year. You know, it's told you bearish, 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 bearish. Things are still bearish. Things are mega bearish. So until this can at least get it back above the daily cloud, just forget it, right? Like, I mean, we're looking at a long-term support here and, you know, an M double top on a multi-year basis. But if we can't even recapture the daily cloud, time will tell. But if we can't, then that's just more down. You know, this is exactly what you'd expect to see during bearish continuation. I mean, this kind of is what it is. If we look at a multi-year pitchfork on ETH BTC, you know, maybe this thing, as other analysis would suggest, maybe it goes to 03, 04, right? I mean, I don't think you can rule that out. Still looks very bearish to me. As far as alts across the board, there was a lot of excitement about this total 3 edge-to-edge play, as I kind of talked about last week. Alts do best post BTC halving, right? So it is appropriate to start to get bullish on alts broadly. Some of them have done extremely well already. But for me at this point, I would want to see everything pull back a little bit, right? A little bit into the top of this range. That's just a better trade, if we're being honest. And it could even pull back basically to half of the previous range, the midpoint, and still be fine. So I do think everything leans bullish. You just have to give this a ton of time. I'm talking like maybe a year from now, right? Alts across the board have been doing really well over the past couple months, but alts may do better 2, 4, 6 months after halving next year. Sol's level here somewhere in the 50s. Again, you know, it's been hugging this Tenkin the entire way. And if we start to lose that, that would suggest weakness to the next support, which would be in the 50s there. ADA, same thing. You know, maybe these print some sort of pattern. I don't know what Sol would print up here. If anything, it already looks like an M double top on the daily. Maybe ADA goes for the head and shoulders, but it doesn't have to, you know. On some of these charts, I think the Kijun is generous. You know, I'd expect ADA to go back to 38, basically the pre-breakout level there. AVAX, I'd expect in the 20s to go back to, even though it's still a 33% move down to the Kijun. If things get truly angry across the board, there's a yearly pivot, by the way. If things get angry across the board, you know, I don't think there's going to be a lot of bids in general on some of these alts. DOT, somewhere around 570, maybe an M double top already. So there's nothing that's screaming, this looks really bullish here, guys. This looks like bullish continuation. I'm just not seeing it. Link has been kind of on the weaker side already. And if it loses that yearly pivot, you know, I think 11, perfectly reasonable through the daily cloud there. So I like the multi-month targets to the upside on all these coins. It's just in the near term, they probably give a little bit back. INJ looks fine. It's probably, you know, the best looking charts out there, at least one of the best. But even still, you can see this TK disequilibrium, let's call it. Kind of looks like the Loch Ness Monster a little bit at this point. Lots of wicks above 31 there. Then there's stuff like RUNE, which is kind of already rolling over, trying to roll over on the lower time frames. It kept printing head and shoulders, head and shoulder, 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 shoulder. Eventually it broke down, right? And now it's below the cloud. And until this regains the 4-hour cloud, I wouldn't get too excited about it. It does look like it's ready to continue to the downside. It led on the way up, probably leads on the way down to some degree as well. Daily Kijun all the way down there, somewhere around 450, let's say. And then, of course, there's BONK, which, if this thing goes to zero, I don't think anybody would be surprised. It doesn't look super happy. This is on linear, by the way. This is not log scale. This candle you could call a inverse dragonfly for those candle folks out there. A great example of an inverse dragonfly. A very strong reversal signal. I don't want this to go to zero. I would be happy if it did, don't get me wrong, but I don't want it to go to zero. It just very much looks like it wants to go to zero. Anyway, it doesn't look happy here. I wouldn't expect any major moves to the upside on your generational bonk phone. DXY, transitioning to legacy for real quick. DXY still looks more bearish than bullish. It's trying to sort of recapture some of that down move, but this should roll over on the cloud on the daily, and it should start some real deal bearish continuation. Just as we kind of see a mini inverted cup and handle on DXY here. We see that on the S&P. We see that on NASDAQ. One caveat for my bearishness this week on crypto would be if legacy can take us to the promised land by continuing. It's been 1, 2, 3, 4, 5, 6, 7 weeks in a row here for the S&P. It probably makes more sense if we don't retest an all-time high after 7 green weeks. I wouldn't rule that out, but reconsolidating up here would look good, I think, right above the yearly pivot. Cup and handle still live. Cloud likes it on the weekly. So this still looks very bullish to me, even though the bears are still out in full force saying, everything looks terrible in the economy or whatever else they're looking at. NASDAQ also looks very good up here, basically at all-time highs at this point. So if legacy can continue its bullishness, which I think the probabilities are unlikely, let's be honest here, right? I think it does cool off a little bit. But if legacy continues bullishness, that's good for crypto. If DXY continues its bearishness, that's good for crypto. I think what's best for us is just a consolidation, pullback, reset funding, reset all that fun stuff. So if I had to pick one this week to be bullish or bearish, it would be leaning towards the bearish side across the board for risk, so that would be crypto. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.